Wow, there is complete and utter turmoil, and that turmoil is also going to lead to an apology from me. So let's talk about these in order. And number one, ever since we heard Jerome Powell yesterday suggest that we might essentially have higher rates forever, we have seen a complete dumping of Treasury bonds. We've seen the 10-year skyrocket about 13 basis points. We're over 4.5% on the 10-year now. Real estate mortgage rates just skyrocketed over 8%, leading a lot of people to believe that real estate is about to actually hit the toilet or take a massive poopsie-doopsie this winter. Black Friday this year might not be about getting a cheaper TV. It might actually be about getting a cheaper house. This Christmas might be the opportunity to buy the best deal in real estate ever. And this turmoil that's happening in real estate, where people expect now the Fed's certainly not going to bail anything out this year. They're going to keep hiking until they break something. And that break, by the way, might not be another bank. You know what that break could actually be? The entire housing market. It could be the housing market, which that's where then people are speculating, oh, Jay Powell and the Fed put will come in next year because, by March or the summer of next year, we'll be able to confirm that, yes, indeed, inflation has trended towards 2%. We're on the path to 2% already there. Or they pull out flexible average inflation targeting. And what do we end up having? We have a Jay Powell bailout of real estate, and all of a sudden you start seeing rates fall and people getting really excited about real estate again. That's all speculation. Who knows? But that's what people are believing right now that could happen. And we're seeing exactly that in the real estate market. I mean, we heard Lennar, the home builder, talk about Boise and Austin hitting the complete poops, and their real estate market essentially hitting a wall. Buyers all of a sudden are gone. Active listings are plummeting in terms of price relative to sold comps. That's a scary mode when all of a sudden actives are selling for less than sold. And when we were in those markets, we felt exactly the same thing. Real estate is all about people and being local. And we're seeing it in almost every single market now. We're starting to see it in NorCal. We're starting to see it in SoCal. We're seeing it in Florida. The actives are starting to come in softer than the pendings. That's probably because of the normal back-to-school buyer demand being gone. And now the active listings are sitting. They're not selling. And people are like, oh, crap, winter is coming. But that turmoil is also leading to this apology that I have to make. Because it's becoming very clear that there could be massive opportunities in real estate this winter. Since the Jay Powell meeting, we have gotten absolutely destroyed with emails from people asking us about their investment and their ability to invest and the timing of their investment and everything related to their investments into HouseHack. Now, obviously, you should read the prospectus/offering circular that's available at househack.com. It's a fundraise that we're doing for my real estate startup at a 1-to-1 valuation. Keep in mind, there are obviously processing fees and other things that go into raising money, so net of that. But outside of that, it's a great company at a great valuation. It's my expectation. But I think what's happening is more people are getting interested in diversifying into real estate, so much so that now our payment processor can't keep up. That is, we're so inundated with people trying to get in that our payment processor is like, whoa, this is way more than we expected. We can't handle this. And so now we basically just have to apologize and ask for time to get back to you. So we expect to be able to get to everybody's situation within the next week, but it's not going to be within the next 24 hours. We'll be able to have whatever questions you have resolved within the next 2 weeks. We don't think we're going to close the round or anything for probably at this rate for at least the next 30 days. That's the goal, so we can make sure we get everybody who's inquiring processed. But it's really interesting because we're seeing these crazy market dynamics actually translate directly into this demand for investing in HouseHack. That's at least what it feels like. I can't know with certainty, but here's what we do know. We know that certain markets in real estate are hitting a wall. We know, and therefore markets are fearing a Paul Volcker, because what do we know? We know that there aren't going to be any cuts, no cuts soon. Obviously, we should put a little asterisk here, because the asterisk is unless break, right? If something breaks, then we might get cut soon. But then you have bigger problems. T.S. Lombard, our famous bear, what are they saying? They're saying the best thing for risk assets is a slow decline in rates next year. The worst thing for risk assets is, oh crap, we broke something, and some kind of recession. This is very interesting since they're sort of your resident bear. The resident bear is saying you don't want quick and rapid cuts. Well, now we're feeling a wall hit in real estate. People are seeing that as an opportunity to finally buy real estate, but you have to be able to buy real estate. And frankly, most people don't want to pay 8% on a mortgage today. We just ran the numbers on a $780,000 house, which is like a regular 3-2 in California, or maybe like a 4-2 in Austin or whatever. We ran the numbers on this. We used a 1%, 1.2% property tax rate, but we ran the numbers on a $780,000 house, and we wanted to find out what would your payment be on this, and how much money do you have to make to qualify for this at a 30% front end, 35% front end ratio. Ignore some of that, but assuming 10% down. Assuming a half point in mortgage insurance, which means your rate is not 8%, it's actually 8.5%. Again, assuming 10% down and a 1.2-ish% property tax rate, people are going to have to pay somewhere around $6,000 a month just to be able to buy this kind of property. There's no way you can finance this right now. People who are financing this and they're underwater with their payments on a monthly basis if they're renting out these properties, which you're not supposed to anyway, unless you're putting 20-25% down. And I think what people are doing is they're speculating on the cuts. But right now the market's going, don't plan on cuts. Right now we're dealing with basically Paul Volcker over here, is what it feels like. That's the sentiment right now. So we're getting people saying, you know what, hey, Kevin, you do it. That's what it feels like. Again, I don't know if that's exactly what's happening, that this turmoil is leading to all of these emails and inquiries, but we're getting blown up. Obviously, learn more at househack.com. And again, I apologize. We have to ask you for patience. When you go through the portal, by the way, we have now removed all fees to invest. So there's no credit card fee, there's no ACH fee, there's no wire fee, nothing. It is, if you want the credit card rewards, you can do that. It is cheaper for HouseHack at the moment if you just ACH or wire, but that's your choice. We'll leave that on you. If you want to Apple Pay, you could literally Apple Pay to invest right now in HouseHack. It's kind of wild. A quick reminder though, don't press the transact button multiple times. People are getting a lot of, there's some cases where people are hitting the button multiple times to invest, and then they see on their statement, they'll see like minus 10K, minus 10K, minus 10K, and then these will be pending transactions. We expect that these will end up being failed transactions and like only one will end up going through, but this will all get resolved. And just a quick little thing that we're finding is some people are getting a little excited to invest, and if you push the button too much, you might end up seeing a few more pendings than you're supposed to be seeing. But again, all this kind of stuff is resolvable. It is mind-blowing to us that a payment processor that has worked with over 200 different funds, or actually I think thousands of clients they say they have, but I thought they've done over 200 funds. I don't even know which number it is. But the point is, it's surprising to me that they're inundated to the point right now where we can't get all of the answers. But I want you to know our entire staff is working on helping everybody as much as possible. And we really think part of this massive surge in demand is potentially because of market turmoil. And I want to be clear about this. This is something else that we've been talking about today, is that really what you want to do is, and everybody says this, but nobody really does it, right? Remember the phrase, be fearful when people are greedy, be greedy when people are fearful. The fear is starting. Let me give you an example. We hit up a seller because we saw the comps in the neighborhood were somewhere around $570,000 to $600,000. So we're like, hey, maybe we can pay around $570,000 for yours. It doesn't need that much work. If it's worth $6,000, we put $30K in, it's a $100K wedge. You know, we were just spitballing. And so I was like, okay, yeah, we'll take it. And one of the first things I usually do when somebody's like, oh, yeah, I'll take your offer. As soon as I think that, I'm like, sounds like I'm overpaying. Let's offer less, which is, it's just part of the game, right? So that seller said, you know what, never mind. We had a closer look at some of the active comps. There's actually some active competition that's not selling at like the 550 level. And we're worried if they end up selling for less, then that really caps what our wedge is on the deal. And so that seller's been reaching out going, okay. How about we sell it to you? Well, that's the comp value. So they come back and they go, how about we sell it to you for $460? Can we do a deal at $460? You said $470, how about $460? Like, no. Like, we're like in the low fours. Like, no, we can't go down that low, but you know what we can do for you? $450. Didn't talk to him for a few days. Kevin, how about $430? And now like the agent's reaching out going, should we write it at 420? It sounds like there might be an appetite to go for that. I'm like, this right here has not happened since 2010 for me. And I remember this happening because we actually had sort of a double dip recession. It was nominal, but it was basically you had your that's not really a double dip. It's more like that. There you go. So you had your 08, 09 crash. Then you had a little bit of a recovery. And then all of a sudden in 10, you kind of start getting this crash again, which bottomed out in 11, at least in our market out here. And that's when I felt this kind of stuff where the sellers are just like, please, I need to get out of this property. Nobody else wants to buy. That's the time to buy. And of course, you have to insulate yourself with a wedge, right? That's the beautiful thing about the wedge is when you buy a property that's in a $550,000 neighborhood, let's say, instead of 6, let's call it 550. You buy it for 4, you're into it for, I don't know, 430 because you could put $40,000 or $30,000 into it, let's say. Now you have a $120,000 wedge, right? So you're into it for 430, you're in a 550 neighborhood. Now all of a sudden the market drops, I don't know, 10%, let's say, that's $55K. 20%, that's $110,000. Well, if the market drops 20% decline, what does that get you to? That actually brings you down to 440. Look at that. Market could drop 20% in that case, and you are still positive on the deal. Those are the deals you want to be buying this winter. Unless, of course, you think the pain of the real estate crisis will last even longer. And this is where you also have to be vigilant. You know, if I go into November and everything's doing this, you know, you don't want to catch a falling knife either. You don't want to go all in. You have to be patient. Dollar cost average. But anyway, that's our job. We do this on a daily basis. If you want to learn more, you could email us at ir@househack.com. But I want to be clear, this treasury market disaster where we're seeing potentially the uninversion of the yield curve, I think we're only about 59 basis points inverted right now, which is almost half of what it previously was. That's usually the painful part, by the way. Don't worry about that if I lost you. But the point is, if you want to invest with us, go to househack.com, learn more, read the prospectus, obviously. There are obviously risks. It's a startup, but we're doing our best to mitigate those risks. We believe this interest rate turmoil is leading to this massive inundation of emails. We're getting a lot of people very excited. They're like, Kevin, I want to invest now. I don't want the round to close. It's okay. We can take a breath. We should, without a problem or without a doubt, have 30 days here. So we're good. We'll get everybody resolved. So I just want to give everybody that confidence, that faith that, yes, this market uncertainty appears to be at least leading to some more interest in HouseHack. And I want to apologize that we can't get back to everybody instantly as much as we would like to. And there's a limit to how much control we have given that we have a payment processor involved. And so we're working with them. We'll work 24/7, but other companies are working normal business hours. So we're a little bit strung or stuck by the parameters that they're working, and that's okay. We'll get it all resolved. And we really thank you for your interest in HouseHack. And quite frankly, I wish you the best out there in the market because it's a wild time. And I'll tell you, it's times like these that make you want to diversify. Anyway, thanks for watching. We'll see you in the next one. Bye.